What's going on YouTube? My name is Ty with the xking.com. Back with another video. Here we talk about the stock market and passive income. And today's question is: does buying the dips really work as a no? Does it really work as a strategy in the stock market? And yes, it does. It does and it doesn't. You can't just wait for the stock to price. And of course, you always hear people say, "Buy the dip, buy the dip." Now, before I begin, I'm not giving any financial advice. I'm not a financial advisor. Please buy at your own risk. Um, you hear people say buy a dip, buy a dip, buy a dip. And you see today, today is February 3rd at 3:17 p.m. I see the market's dipping down some. So this is when you really want to, in my personal opinion, if I have some cash on hand, I'll go ahead and buy some of these shares because they're getting cheaper. And what you do is click into these stocks here, and you see how much is down. So in the past week, it's up 45%, but the past month was down 79 cents, and today's down 5 cents. So, I mean, um, like no QLOD, it hovers around, $22, $21. So it gets to like 18, 19, maybe 20. In my personal opinion, it's a good buy because it hovers around, $22. But you have to really know the stock price. I think Horizon right now is a good deal. Yesterday it was like 6.10, and today it's $5, $15.17. So yeah, you really want to, like, I know Realty is fairly expensive. Over 3 months is down, but today is down 86 cents. So you want to like capture when they get to this cheap. Um, it's a strategy, but when you're in a when the market's going up, that buying dip thing kind of falls down when the price goes up and everything. So of course you want to buy when the price is cheaper, but don't sit there and wait to buy. Um, because if you sit there and wait and it goes up to $3, $4, you should have bought in was up $1. You should have bought it with up $2. So you can't predict the stock market. So you really have to know the stock, and that's why I always tell people get you a big watch list. Get you like 20 or 30 different stocks. You look at every day. It's on your phone. You look at every day so you know how much these stuff price. And I knew that yesterday Horizon was at 16.10. Now it's at 17.71, and it hovers around $15, $14. So I will usually buy this. As you can see here, um, yesterday was the second. It was $16, but January was $14. So I know that when it goes up to that, and also look at the um 52-week high and 52-week low. The high is $19. You don't want to buy the high. You want to buy the low was at $12.58. So the low is $12.58, and now it's $15 and $14. Not a big difference, but you don't want to buy the high. You want to buy $19. You do not buy the high. You want to buy when it goes low. When it turns red, that's when you start getting these stocks here. So yeah, buying a dip is a strategy, but it doesn't work all the time, because that price can go up and up and up and up, and you be like, well, dang, I should have bought in when it started going up. I should have bought in instead of waiting. Now it's like $3, $4 more. I could have got it $1 more and still made a little bit of money. So you really have to know the stock and the company. You really got to look at these charts every day to see, you know, what's good and bad. My personal opinion, I want to buy some stocks. I would buy some because they're cheaper today than it was yesterday. Um, and I kind of base it on how QLD is doing. Not base it, but QLD is like my baseline. And I know these stocks prices, when you catch it like this, you gotta keep on like looking at, okay, is it a good deal or not. You make sure it's red, and how far is it red. I think Realty Income right now is a good get right now because of the past year is up, $10, and you know, in the past it was like 70, it was $75. Now it's at 69, and it usually stays with that price anyway. So something like this, you gotta buy the dip anyway. You really can't wait to go down to $50 because it probably won't never happen. I'm not saying it will never happen, but it probably won't happen. So that's it in the video. Just buying dips is a good strategy. It's a good strategy, but you must know what you're doing. You must know your stock and the price, and when it go down, how far would it go down before you buy? Because then where it goes down 30 cent, you buy. It can go down to $1, $2, and then you kind of like, well, I should have waited. So buying the dips is a great strategy, but you got to watch it out. You have to watch out because I bought AR this week. I'm down $1,000, which is ridiculous, but I bought this yesterday. I bought it for $9.22. I got 3 shares. Um, and right now it's at $9.11. So if I'd have waited a day, I could have saved me, 30 cents. I could have got it cheaper, but you don't know. That's what I'm saying. Buying the dips is like, you could buy the dip, but it go even lower and lower and lower. If they go to $8.80, like, but now I should have waited to a couple of days to go down deeper, but you don't know that. So buying dip is a strategy, but you must know the stock. I know the stock is usually priced, the last 5 years. It was almost $19, and before the pandemic happened, it dropped and it's never recovered. I think all this dips anyway. This stock, like something like this, when it was going back up, it was like $20, $21, and it was going up to $20 and dropped when the pandemic happened. It never recovered. To me, this is a buy. To me, this is a buy, absolute buy, because if ever it's real estate, if it ever goes up to $20, I'm positive money. That's my personal opinion. I've been watching stock every day. I know the company, and I do my own research. I've been watching this before the pandemic even happened. I want to pick up these shares, but I'm glad they pick it up at $25, $20. I picked it up at like $12 and $9, $10. So you have to get to the pros and the cons. I picked it up. My average price is $10.85, which I'll take that versus buying it at 17, 18, almost $20 a share. So I'm trying to rack up what I can because it has not recovered back to where it was. Will it get to that point? I don't know, but right now I don't care about that. Right now I'm trying to rack up when I can. I'm trying to get 1,000 shares of this before the price go up to $20 if it gets there. But there's no indication that it won't get there. It just takes a long time for it to rebound. But I'm watching this, and I liking it so far. And you see, yeah, it was going down, but I feel like it was going up. I think it was going up at $20 a share, and it dropped. So and it just couldn't recover. It went up to $12 and $10 and $9. It's never recovered. But I think it will recover. I think once that blows over, I think it will recover. This is my personal opinion. Not getting financial advice in this video at all. I'm not a financial advisor, but this is my personal opinion. So yeah, I mean, you gotta be careful. You gotta know the charts. You gotta know. As I say, I've been watching that for years, and I think it will recover to back to where it was. I mean, pretty much all the stocks that I was investing in, they're back to where it was, before the pandemic. So O and Main Street Capital, they're back to where they were before the pandemic, even better. But this stock has not got there yet, which is okay with me. I'm rocking up these cheap shares now at $9. Because if I bought this at 17, 22, $25 a share, that's $9 a share, I've been pissed, really pissed. So I'm glad I got it for $9, $10 a share, which is not too bad. I can hold this forever. So that's the end of my video. Please like, subscribe to the channel, and I'll see you next time.